All right, this is your market recap for June 3rd, 2025. As you can see today, we did play bullish. We had a slight premium new day opening gap, but then overnight we came down and created the sell side wick. If we go down to the hourly, you can see that. We opened here. Not exactly sure where the new day opening gap shows up here, but oh, no, because that's the wrong day. Is it? No, it's not. Anyways, new day opening gap somewhere here. We see this sell side wick created. We have a reaction off this 4 hour. So let's go to that time frame. We can see 4 hour fair value gap, right? Sell side imbalance, buy side inefficiency. Validated here with this huge rejection wick here, in my opinion. That is validating it. And if we look here, perfect closures. So go on the hourly time frame. See price overnight nicely respect this and start to round, and then transition out of that. Pre-market helped us expand up. So as of this, if this is our reaction, I'm looking to take out these highs here, this high here, and any inefficiency through here, which we ended up reacting off of this hourly fair value gap. If we go down to the 15-minute, this is where our short-term bias starts to come into play. We see a nice expansion here for pre-market, and then we come to take out these lows. This is enough for us to have the energy to continue playing bullish. From here, there's honestly not much more I can say on the 15-minute. That won't be explained better on lower time frame. So we have this 15-minute here, which price nicely retraces off of once PM session resumes. If we go down to the 5-minute, we can see here more so. Price swept this low, right? These relative equal lows. Didn't close below it. If we look at this candle right there, barely closed below it, right? So typically I'd want to see it come down to equilibrium, but we see it take out relative equal lows, and with how unsure it is and with how little speed that it has to break these lows, it tells me that it doesn't want to go up. We then see price take out this high, retrace, and then we come up, market open. I was looking for us to take out this low. All right, I had this low highlighted. So if we stick this here, I'll walk you through my thought process. My thought process, come market open. You know what? I'll come back to that on the 1 minute. But we have this 5-minute fair value gap that got reacted off of twice. Nice bullish expansion. We have a 0.5 of the fib expansion of the retrace. So if we go here, negative 0.5. Perfect right there. The reason why I chose this is because my profits were this high here, obviously this candle here, and then this liquidity over here. And in between those is this huge gap of like, what is it? 120 handles. It's too big of, oh, sorry, no, it's just the wrong high. 100 handles, still too high for my liking. So I said, all right, give me a fib expansion between them, and perfectly between them is 0.5. So we expand, we hit it, retrace pretty deeply actually, in my opinion. The early market open was a little inconsistent between ES and NQ, which looking back wasn't my favorite. I was very hesitant in my trade. I took it when market was looking nice, and then as ES started to consolidate and NQ started to drift higher, I was trailing my stop fairly quickly, accounting for all the SMTs that were showing up between the two because ES was not playing bullish at the time. We then get another expansion here, which ends up taking us here. You know, with lunch, I would have liked to see a larger retrace come to take out this low. But what does this tell us? The lack of a retrace for lunch means that it's most likely going to happen for PM session, which is exactly what happens. Because we can't just have an expansion here and then close the day up there. We can, it's rare. It's very rare. So what do we end up doing? We come falling off the high, right, reacting off this 15-minute, and then coming up to close in the middle of this range. If we go here, fib expansion, look how price congregates around the middle of this price range. Oh, sorry. 5 minute fair value gap here gets a couple reactions off consequent encroachment. This inverse here, buy side imbalance, sell side inefficiency. Reaction off it here validates it. So we can fairly assume that if price is coming up, it's likely to come back to this point and react off of it. Now in the 1 minute, you can see here, ton of SMTs, right? Not the cleanest price action in the world. ES is actually ungodly disgusting at this time. And thankfully, I mean, I'll give it a little luck. I'll call this trade a little lucky, because if I was on the wrong pair, right? If I took this trade on ES, definitely would have gotten stopped out. But I was lucky that I took it on NQ, and that NQ was the one to actually expand. So let me walk through what I was thinking. I saw these relative equal lows here, right? These two. And then I saw where price was, right? I mentioned this low here, we had just expanded, whatever. We took out these relative equal lows, but continued higher instead of retracing lower. Makes sense, right? And then market opens and we rally, taking out this high. Now what this tells me is that, all right, we have buy side. We still have these relative equal lows here and this one here. Now, ideally, this one would have gotten taken too. But seeing how price took out these and immediately lost all volume, you can see all the wicks starting to form here. Not to mention that it's an SMT. It convinced me that we are going to play bullish. Right, taking out this low, losing momentum, SMT, all signs that we're reversing. We then get this nice bullish expansion. I entered, if you see this gray line right there, right, where it says add text, that's where I got in. It's a roughly, because it was fast, it happened fast, so my limit order was a little off, but it was a 15-second fair value gap that was created after we broke structure of this high. So I got in there. My stop was all the way down here. No, that's going to take up too much of the screen. So just know my stop was down here. I was looking here. We had news at 10 o'clock, which I was keeping my eye on. During the macro, another SMT, like I mentioned. Not my favorite trade that I've been in. I had faith, though, that once price took out this high and started to see it retrace, that we'd retrace to this 5 minute and not stop me out. I ended up trailing my stop here, but then I saw how we reacted off of this fair value gap here, right? This bearish candle here keeping us down. We reacted it in a bearish way. So once we came up above it, closed it, I expected price to come back down and react off of it. We then play bullish again, and once this, either this candle or this candle closed, I think it was this one because it was above this high, I moved my stop to under this. Once again, because price action was very, very, it wasn't the nicest, I'll say. And so price comes all the way up, perfectly top tick, takes me out at this 0.5 fib expansion, which again, if I'm taking the trade after this bearish expansion, we take that bearish expansion, go on the fib, throw on a -5, and boom, there we are. So where I got stopped out, like I mentioned, my stop was here, is once we hit this, price very, very energetically came all the way down, tapped back into this 5 minute, which took me out. Now, I would have stayed in. If I put my stop loss at break even, right, this gray line here, I would have still been in, and it would have ran to my fulls, which were all the way up here. Mind you, it would have taken a long time, but it would have gotten there. We see price, after the retrace, start to rebound up. I would have expected to see price reverse during this macro, seeing as the move started pretty early in AM session, but that doesn't happen. We end up having an SMT during the 1150 to 1210 macro, which expands us higher. And then once we reach the low of this hourly fair value gap, we start to lose volume, right? I'm kind of surprised that we don't start playing bearish here, but price runs up one more time, hits constant encroachment, starts to retrace lower. And since, like I mentioned this earlier, since AM session and lunch were both bullish, it is very, very likely that PM session is going to retrace. So once we see this start to break down, we take out this low, retrace, reacts nicely off this bottom of this hourly fair value gap and this volume imbalance right here. All right, the gap between these two, price closes perfectly to the top of it. Once we see that and price starting to break down, we're all good, right? We wait for the macro, right? Because we don't want to get in something when the macro is likely to come up and create a high. So we see the macro create this high. We assume once it breaks down that this is good. So we wait for a change in the state of delivery on the 15-second and a fair value gap. Didn't really feel the effort of finding that on the 15-second, so I just assumed we'd take this minute fair value gap and that's good enough. So this is what this trade would look like. Boom, entry at the low of this fair value gap, stop at constant encroachment of this wick. We target inefficiencies through, liquidity here, whatnot. That would have been a 1 to 5. Pretty nice, pretty fast actually. Once again, PM session was the nicer session to trade. I really need to start looking and acting on those. So once we hit this, again, still during the macro, constant encroachment of this 15-minute fair value gap, start to play bullish back up to this 5-minute inverse, which was created with this rejection here. Start to lose volume, right? If we think about the way a candle expands, right? We have here. Let's do this. Best way to do this, I'm not sure. All right. So let's do this. Market opened here, right? Market opened here. We see price dip down here, right? If we're talking about strictly New York session. Market opened here, ran up, ran down, perfect. This is our sell side wick, right? So from here to here, bang, there's our sell side wick, right? Then we have all this expansion, right? No retraces, no nothing, just straight, boom, expansion, all the way up to here. All right, so as of now being here, this is what the candle looks like. We don't want to close like this. It is very unlikely that we ever close like this. The only reason we would is if there is some sort of high impact news or whatnot that just drives price absolutely crazy. Or if we retrace during lunch and have an energetic PM session. But we don't have any of those. We don't retrace to lunch, so this is where we are in the daily candle or the New York session candle, if such a thing existed. And so since we know that we want to close off of the high, right? We see market close at 315. Or sorry, 415 or 414 to be exact. Right here. Boom. This is when market closes. So price comes all the way down to here. Well, first it comes all the way down to here. And then if we once again show the middle of this range, we see price nicely congregating here. Price comes back up. And this is our buy side wick. So this is what the New York session candle looks like. And that is mainly why I was playing bearish for PM session. So going into the future, still like to take out this high. I think we may be in for a larger, let's look. We opened, well, we're actually just opened here. If we play bullish, take out these highs, I'd like to see more of a retrace But we are decently retraced. This here is balanced. Nice little breakaway gap here. I see us reacting and truly reversing once we take out this high. But for now, I think this is actually good. So we might play bullish straight out the gate. Relative equal lows here. I'd like to see these get taken out. And then obviously, still, this is the daily target. Tomorrow is Wednesday. You know, we'll really, we just have to see and wait and see until what happens overnight and pre-market to see what we end up wanting to do. So yeah, that's been your market recap for June 3rd, 2025.